Welcome to another edition of G2 Financetech's Weekly Market Update, where we bring you the most important market movements, economic trends, and policy developments from around the world every week. From easing inflation in the United States to improving confidence in Europe, renewed stability in Japan, and policy clarity in China, we'll break down what shaped markets this week and what investors should keep an eye on. Let's dive in. United States. Inflation slows, markets rebound. US stocks advanced this week, shrugging off trade tensions and oil price volatility following new US sanctions on Russia's two largest oil companies. Small and mid cap indexes outperformed large caps, led by technology and energy, while defense sectors like utility and staples lagged. Inflation data offered a positive surprise. Headline CPI came in at 3.0%, just below expectations, while core inflation eased slightly. This reinforced the view that price pressures are continuing to cool even as the economy maintains resilience. The S&P Global Composite PMI rose to 54.8, its 33rd straight month of expansion, driven by strong services activity. Still, manufacturers reported lower optimism amid tariff and policy uncertainty. In fixed income, short term treasury yields edged higher while 10-year yields declined, as investors priced in the likelihood that the ongoing government shutdown could delay key economic data and policy responses. Municipal bonds also performed strongly, supported by solid demand and limited new supply. Europe. Growth firms up, confidence improves. European markets ended higher across the board. The STOXX 600 up nearly 1.7%, supported by firming economic data and dovish expectations from central banks. The UK's FTSE 100 led gains, climbing more than 3% as both inflation and retail activity surprised on the upside. UK inflation held steady at 3.8% for the third straight month, while retail sales rose 0.5%, the fourth consecutive monthly gain, signaling continued consumer resilience. Across the eurozone, business activity strengthened with the composite PMI rising to 52.2, its highest since May 2024. Germany led growth while France continued to struggle. Meanwhile, consumer confidence improved to its best level in 8 months, pointing to a gradual pickup in sentiment across households. Japan. Markets surge on political stability and stimulus hopes. Japanese equities rallied sharply this week, with the Nikkei 225 up 3.6% after Sanae Takaichi officially became Japan's new prime minister. Her pro growth agenda and anticipated fiscal stimulus package fueled optimism across financial markets. The yen weakened to around JPY 153 per dollar, while the 10-year JGB yield edged up to 1.65%, reflecting rising fiscal expectations. Inflation remained above the Bank of Japan's 2% target at 2.9% year on year, suggesting the central bank will maintain a cautious stance before tightening further. China. Growth holds, but domestic weakness persists. Chinese stocks posted solid gains, with the CSI 300 up 3.2% and the Hang Seng rising 3.6%, supported by strength in technology and export focused sectors. Economic data showed GDP growth of 4.8% year on year in quarter 3, keeping China on track to achieve its 5% annual growth target. However, retail sales slowed to 3% and fixed asset investment contracted, reflecting persistent weakness in domestic demand. At the recent fourth plenum, Beijing reaffirmed its focus on self reliance in science and technology while pledging to maintain a strong manufacturing base as part of its 15th five-year plan. G2 takeaway. This week's market rebound signals cautious optimism returning across regions. In the US, cooling inflation and resilient business activity gave investors a reason to breathe. Europe showed signs of momentum, though growth remains uneven between North and South. Japan's new leadership brings fresh physical energy and a potential boost to confidence, while China's recovery continues to hinge on domestic consumption. The broader takeaway: Markets are adapting to a world of moderating inflation, shifting fiscal priorities, and fragile political balance. Investors should continue to stay diversified and alert as policy direction, both monetary and fiscal, remains the key driver of sentiment heading into the final quarter of 2025. That is your G2 weekly market update. Thanks for tuning in, and as always, we appreciate your continued support. If you found this update helpful, do not forget to like, share, and subscribe to stay ahead with G2 Financetech, your trusted source for global financial insights. Until next time, stay smart, sharp, and global. Thank you.